Is Tesla about to skyrocket to $1,000?
Tesla faces a new lawsuit.
The world's richest man reportedly now moving.
Or is it a bubble ready to burst at $252?
Do you think, for example, China will make a move to take control of Taiwan?
Taiwan should be integrated. One does not need to read between the lines. One can simply read the lines. I think there's some inevitability to this situation.
That would not be good for Tesla, conceivably, or for any company in the world.
Tomorrow's earnings could change everything. But what's the real play for the next 15 months? Stick around for a jaw-dropping prediction you won't see coming.
You shouldn't buy stocks unless you expect, in my view, you expect to hold them for a very extended period, and you are prepared financially and psychologically to hold them.
Hey everyone, welcome back to the channel. Before we dive into Tesla's big earnings drop tomorrow, let's check out how TSLA stock has been moving over the past month. Since mid-March, Tesla's been stuck in a descending channel, sliding about 15.3% from a high of $263.85 to its current price of $223.46 as of April 23rd. It's down 1.5% overall for the month, with support holding around $220 and resistance capping it at $263.85. This bearish trend has investors on edge, especially with earnings looming. Is this a dip to buy or a sign of bigger trouble? Let's break it down. Before we go further, smash that subscribe button and ring the bell so you don't miss a single update. Let's get into it. First, let's set the stage. We're living in the age of artificial general intelligence, AGI, the most game-changing invention in human history. I've said it before and I'll say it again. AGI is bigger than fire, bigger than the wheel, because it's replacing human intelligence in value creation. This isn't sci-fi, it's happening now. Since early 2025, AI systems at companies like Anthropic, OpenAI, and Gemini have been improving their own code, inching us closer to a full AI takeover. And Tesla? They're right at the center of this storm, leading the charge with autonomous driving and humanoid robots. This is why I'm so focused on TSLA. It's not just a car company, it's an AGI powerhouse. But with great potential comes great risk. Let's break it down. Coming up, I've got a shocking stat about Tesla's robotaxi plans that'll make you rethink everything. Don't go anywhere.
Now let's talk about Tesla's two massive catalysts, robotaxi and Optimus. Tomorrow's earnings call will have all eyes on the robotaxi launch in Austin. Critics on X are screaming. Elon's been promising self-driving for a decade and failing every time. They point to his history of missed FSD deadlines and say it'll never happen. But here's why I think they're wrong this time. Picture this. A general storms a beach with 5,000 troops and fails. Next year he comes back with 10,000, then 20,000, then 40,000. By the time he's got 640,000 troops, what are the odds he fails again? That's Tesla with robotaxi. Each failure doubles their tech, their data, their focus. With $5 billion a year in R&D, more than any other autonomous driving or robotics company, they're a machine built to win. I'm betting they'll launch robotaxi this year, even if it's not June, with a 90% chance of nailing it by Q2 2026. Here's the shocker. Tesla's robotaxi could tap into a $7 trillion market, and Optimus? It's eyeing an unlimited market, $25 trillion to start, by replacing all human labor. That's enough to make your head spin.
So why am I so bullish? Let's debunk the risks. First, are Tesla's teams clueless? Nope. They're some of the best in the biz, with proven track records in AI and robotics. Second, funding. Tesla's got cash to burn. $5 billion annually on R&D, dwarfing competitors. Third, focus. Despite flack, Elon's laser-focused the team on robotaxi and Optimus, even sidelining affordable car models. Everyone at Tesla knows the stakes. Fourth, pressure. Wall Street's breathing down their necks, and competition in robotics is heating up. No one's slacking off. With AGI accelerating and Tesla's supercomputer Cortex packing 60,000 H100s of compute power, they're set to dominate. Optimus Gen 3 demos are likely by Q4 2025, with commercialization by mid-2026. This isn't a question of if, it's when. Before we talk trading, I've got a wild story about an investor who turned Tesla's last dip into a 10x gain. Stay tuned!
Let's zoom out to the market. AGI is rewriting the rules. Some stocks will soar, others will crash. I'm with legends like Warren Buffett and Ray Dalio on this. The broader market faces long-term risks. But here's the thing. AGI stocks like Tesla and the Magnificent Seven can decouple and rocket higher, even in a bear market. Why? Because robotaxi and Optimus unlock real revenue streams. $7 trillion for robotaxi alone, not hype. A market crash could derail Tesla short-term, but crashes don't last. In a sideways or bull market, Tesla's unstoppable. For robotaxi, we need a commercial launch. costs under $1 per mile, 50% plus margins, mass production of cybercabs, and rollouts in 5 major cities like Austin, Dallas, and Phoenix. I give it a 30% chance of hitting all marks by June 2025, but a 90% chance by Q2 2026. Optimus, expect mind-blowing demos by mid-2026. Think 5,000 robots working autonomously in a factory. When investors see that, it's game over. Now let's get to the juicy part. Valuation and trading. Tesla's fair value, based on discounted cash flow, ranges from $42 to $201. Current price, $252. That's overvalued by a whopping 107% on average, using the midpoint of $121.50. So what's the move? If you're holding, sit tight, don't buy at this level. For short-term traders, wait for a dip to $221, then sell at $367 for a solid profit. That's a 66% gain if you time it right. Want to trade TSLA like a pro? Head to im-am.com for top-notch tools and insights. But always do your own research. This isn't financial advice. Tomorrow's earnings could shake things up. Best case, Elon confirms robotaxi progress, but Wall Street freaks out over margins and sells off. Perfect for buying the dip. Worst case, delays on robotaxi or Optimus and the stock tanks. Either way, I'm focused on the big picture. A 90% chance Tesla hits its inflection point by mid-2026, potentially driving the stock to $800 or even $1,000 with hype. That's a 2030 target of $11,000 if they nail both robotaxi and Optimus.
Now here's a comprehensive financial ratios analyzing Tesla's TSLA financial health using key financial ratios. We'll explore key financial ratios to assess the company's liquidity, solvency, profitability, efficiency, and market valuation. As of the latest data, Tesla's current ratio stands at 200, indicating that the company has twice as many current assets as current liabilities. This suggests strong short-term financial health. Tesla's quick ratio is 1.38, which excludes inventory from current assets. This still reflects a solid position to cover short-term obligations without relying on inventory sales. With a cash ratio of 0.56, Tesla has sufficient cash and cash equivalents to cover over half of its current liabilities, showcasing decent liquidity.
Tesla's debt-to-equity ratio is 0.17, indicating a conservative capital structure with low reliance on debt financing. At 1.54, this ratio suggests that Tesla's earnings before interest, taxes, depreciation, and amortization can comfortably cover its debt obligations. While specific figures aren't provided, a higher interest coverage ratio would imply that Tesla can easily meet its interest expenses, reflecting financial stability. Tesla's gross profit margin is 18.25%, indicating the percentage of revenue remaining after accounting for the cost of goods sold. With an operating margin of 2.55%, Tesla retains a modest portion of revenue after covering operating expenses. Tesla's net profit margin stands at 6.38%, reflecting the percentage of revenue that translates into net income. At 3.72%, this ratio indicates how efficiently Tesla utilizes its assets to generate profit. Tesla's ROE is 8.77%, showing the return generated on shareholders' equity.
With a ratio of 0.82, Tesla generates 82 cents in revenue for every dollar of assets, indicating moderate efficiency. Tesla's inventory turnover is 5.30, suggesting that the company sells and replaces its inventory approximately 5 times a year. Specific figures aren't provided, but a higher ratio would indicate efficient collection of accounts receivable. An increasing payables turnover ratio implies that Tesla is paying its suppliers more frequently, which could impact cash flow. Tesla's EPS is $3.12, representing the portion of profit allocated to each outstanding share. With a PE ratio of 70.19, investors are paying $70.19 for every $1 of Tesla's earnings, indicating high growth expectations. Tesla's PB ratio is 10.15, suggesting that the stock is trading at over 10 times its book value. At 6.70, this ratio indicates that investors are paying $6.70 for every $1 of Tesla's sales. Tesla's EV/EBITDA ratio is 69.96, reflecting the company's valuation relative to its earnings before interest, taxes, depreciation and amortization. Tesla's book value per share is $23.18, representing the net asset value allocated to each share.
Tesla exhibits strong liquidity and a conservative capital structure, indicating financial stability. However, its profitability margins are modest and efficiency ratios suggest room for improvement. The high valuation ratios reflect investor optimism about Tesla's future growth prospects. Investors should weigh these factors carefully. While Tesla's financials show resilience, the premium valuation requires confidence in the company's ability to deliver on growth expectations. What are your thoughts on Tesla's financial health and valuation? Do you believe TSLA is a buy in 2025? Share your insights in the comments below. Let's hit some FAQs. Is Tesla a long-term buy? Yes, but wait for a better entry. What's driving growth? Robotaxi and Optimus, $7 trillion and $25 trillion markets. Biggest risk? Market crashes or production delays. Got questions? Drop them in the comments, I'll reply. Don't forget to like, subscribe, and hit the notification bell for more in-depth financial analyses. There you have it, Tesla's roadmap for the next 15 months. From Robotaxi to Optimus, they're on track to dominate the AGI wave, but timing is everything. Hold for now, trade smart at $221 to $367, and keep your eyes peeled for dips. For more strategies, visit im-am.com to level up your trading game. Loved this? Smash that like button, share with your crew, and subscribe for more. Next time, we're tackling another hot stock. See you then.